Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me here for another show and lots of interesting things to talk about with new all-time highs in the ASX, the S&P 500, gold coiling up. Could that be about ready to break out? So plenty of interesting things to talk about. And also your stocks, get them ready. We'll go through those in the second half of the show. Any stock codes you're interested in having a look at, we'll call up the charts, we'll go through it all. I think it should be interesting. As always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all of that, let's get into this week's first chart. So we're going to start with the ASX 200. And well, the index is starting to pull back after a record run. What should we be looking for with this pullback, and should we be locking in profits? I'll tell you what I'm doing in a moment. And then over in the US, the S&P 500 has hit a new all-time high this week. I've got some fascinating results from an investor survey that I want to show you. I think you'd be surprised at what it reveals. I'll come back to that shortly. But first of all, let's start with the ASX 200 and the latest price action. So on Monday, prices hit an all-time high before pulling back over the last few days. And that brings the total gain. So the total gain from the August low to the August high, it comes in at 4.9% or thereabouts. And when we consider that August is historically one of the weaker months of the year, this really is an exceptional performance. I think there's been a lot of scrambling back into positions that people sold off and panicked during that April sell-off. I suspect it's a case that a lot of people have been waiting for a larger pullback to get back in, and this persistent rally with only these short and shallow pullbacks along the way, it just hasn't given them that chance. And just like the panic selling on the way down, I think what's been happening, particularly over this month, is a fear of missing out on the way up has led to a degree of panic buying as prices have broken higher early in the month and then run. And you can really see this playing out in the small ordinaries and in the emerging companies index. I'm going to come back to them a little bit later. So what could be happening now? What could be going on with the current setup? Well, even exceptional performances need consolidations. And I think the odds of a multi-week pullback or multi-week consolidation, I think they're increasing. So prices have been historically elevated above their 50-day moving average. I've got the 50-day and the 100-day moving averages on the chart. And this typically precedes a period of consolidation when prices get stretched above the averages. So let me just quickly show you what I mean. I'm going to put on an indicator which just shows how far above the 50-day moving average the market is. I'm just going to compress this so we can get in plenty of data. I'm going to mark out the current point, which is about 4%. The market got about 4% above its 50-day moving average. Just run that across for a bit. So you can see prices got to about 4% above the 50-day moving average at the recent high. And when you cast your eye along here, you'll see that 4%, sometimes an extreme can get a little bit more extreme, but more often than not, 4% tends to be a bit of a limiter. There's extremes getting more extremes. That can always happen, but more often than not, an extreme leads to a cooling off period. And you can just see the most recent run during July got to those extremes and then had that cooling off period, just went through that multi-week consolidation during June and into July. So what should you do in this sort of situation? Do you take profit and say, look, market has been high, it's starting to come back. Do I take profit? Do you hold? Do you get ready to buy the dip? Well, for me, it's a case of continuing to do what's been working, and that is holding winning positions for as long as possible. And that's because I know that I could be completely wrong when I say prices look like they're heading into a multi-week consolidation, and instead maybe they briefly pause and then run further. So I don't want to be trying to get too clever and taking profits, planning to buy back in when prices pull back the moving averages and that sort of thing. It's interesting. I heard several analysts. This is a few months ago. This is during May. We'd had that strong rebound off the low. Prices were quickly up. How much was that? Prices put on like 15% in about 3 or 4 weeks. And I heard several analysts come on various talk shows and online talking about taking profits after that initial run. And this is the sort of thing that fuels rallies when people they take profits and the market moves. What often fuels part of the rally is those people then needing to buy back in at higher levels. So for me, if something's working, I don't want to bet against it. I want to give it every chance to keep working and give that rising trend every chance to keep going. So right now, I think it's more about being mentally prepared for the possibility of some consolidation, maybe a pullback back towards the moving averages. I think it's about being just mentally prepared for that, rather than going out and selling or taking profit. And remember, consolidations are generally positive as they help make uptrends sustainable. You can see lots of consolidations in every uptrend you pretty much see. What I think's been really positive is the performance in the equal weight. So let's just go over to the ASX 200 on an equal weight basis and just taking a look at this chart. So the equal weight, it had struggled to keep pace during late last year, earlier this year. It wasn't keeping pace with the ASX 200 in the lead up to the into this April correction. The equal weight wasn't keeping pace, but now it's leading the way. You can see the strength of the rally in the equal weight over the last month or so. The message I take from this is that the rally we've seen has broad participation. You can see that in the equal weight that comes through in the equal weight, that broad participation, and that is often a sign of a healthy market. And I think that indicates that any potential pullback, should that occur, I think it's simply a pause within the trend, not a change of the trend. It takes quite a bit more price action to give us a change in trend. Just coming back to the ASX 200, I'm long, as I've been saying. I'm long the ASX 200 index, long individual stocks. I'm happy to stay that way. I think the odds of a pullback are increasing after such a large run. And so from that perspective, I'm hesitant to chase stocks that have run really hard. But that said, I'm not looking to take profits. I want to give this trend every chance to pause if it needs to. Maybe it doesn't. Give it every chance to pause and then continue. But with prices, with prices above these rising moving averages, the equal weight index indicating broader market strength, I think the overall trend remains up. And when that's the case, I don't want to be selling profitable stocks unnecessarily. And of course, I use those wide trailing stops to help me see off the pullbacks when they occur and get me out when conditions change. So let's now go over to the US market, and also after that we've got the small caps, got the commodities, and as we do the US market, I've also got the results of that survey, that investor survey that I want to show you. So I think that's going to be pretty interesting. So first things first, though, let's go to the S&P 500, and it's narrowly edged to a new all-time high on Thursday. The Nasdaq, on the other hand, remains below its previous mark. So you can just quickly see the Nasdaq. It hasn't quite made it up to a new all-time high yet, but the S&P 500 has. So generally, though, prices are still pretty close to where they were a couple of weeks ago. So both the Nasdaq and the all-time high, really, it's been a pretty subdued week, even though we have that new all-time high. At this stage, I'm viewing this consolidation we've had, this sideways move over the last couple of weeks. think that's just a normal pause in a rising trend, and there's nothing in the price action that we have at the moment that stands out as being of any particular concern. The key features on this chart remain the rising moving averages, so the 50-day, the 100-day moving averages, and of course, price is above those moving averages. So that's a classic bullish structure. You'll also notice we've got that clear sequence of rising lows and rising highs. So that's another bullish marker. I think the potential for consolidation, I think it's very much there. It's like, as we know, it's been a big rally with only short pauses. But as I said with the ASX 200, I think it's more about being aware of the possibility for consolidation and not actively going out and getting worried about that possibility and selling stocks that are working, selling stocks that are trending up. I don't think that's the play. When we get these big momentum moves, people often get complacent. They take on more risk, and then when the pullback invariably does happen, uh, people get shocked. They possibly panic out of good positions. Just look at these pullbacks in April last year and August last year. Both sparked fear, both sparked selling, and then they both led to new all-time highs within a few months. So I'm not suggesting that either one of these is about to play out. It certainly could. That's sort of what I'm saying here. Just be aware. Be aware that a consolidation or pullback is probably due, but just keep that mentally in mind rather than going out and expecting the worst, because that underlying trend, it does remain up. So as I'm saying, just remember, we should expect pullbacks. It's all part of a trend, and most don't turn into major turning points. I think a useful level to watch is this low, just from a week or so ago, the 20th of August low. While the S&P remains above this point, momentum remains to the top side. But I think a break below the 20 August low, I think then that would point to a multi-week consolidation getting underway, retest the 50-day moving average, and just do a bit of work. So that's a point, that's a level to be aware of. So why do I think a potential pullback would just be a consolidation and not a lasting high? Well, apart from what I've said about the moving averages, another big reason is what's happening in the equal weight. So let me show you the S&P 500 on an equal weighted basis, and this has been a constructive week. So what we have here is equal weight hit a new all-time high on Friday, and that surpasses the previous all-time high from over in November 2024. And what's been interesting is, so there's that strong move on Friday, and since Friday, the equal weight's just been trading sideways, this sideways price action. And I like that's been holding those gains, and that what we have so far is a shallow pullback. And I like when we see strong rallies followed by sideways price action. And that's because it's often a sign that the market is holding firm and it's not losing ground. I think what we're seeing in the equal weight, I think it's constructive overall. Now let me show you this survey result. So this is from the AAII, which is the American Association of Individual Investors, and it's just going to come down here. So these are the from the last. This is from the last 4 surveys. So there's a weekly survey of what investors are thinking about the market. And the question is, what do investors feel? Where do investors feel the stock market will be in the next six months? How do they feel about that? They bullish, they're bearish, they're neutral. And look at these readings. Now, what's interesting with this is that what I think is fascinating with this, it's that this isn't what you'd normally expect at all-time highs. So just looking at these last 4 surveys, on each occasion, there are more bears than bulls. So going back to the near the start of the month, 43% bears, 39 bulls. 46 bears, 29 bulls, 44, 30, 39, 34. So according to this survey, the majority of investors have a bearish tilt towards the market. And that's not how major tops generally form. Lasting highs typically form during excessive bullishness. You'd expect to see a lot of bulls and not too many bears at a major top. So it's another reason why I don't think we're heading into a major top at this point. And I think this is another reason to believe that this trend has further to go in the coming months. So just coming back to the S&P 500, I continue to believe it's a case of staying long stocks. The overall structure here is bullish, and until I have good reason to do otherwise, I want to stay invested and try and see off consolidations when they happen. Wide trailing stops. That's my plan to continue doing that. Okay, so let's go over to the small caps next, and we've got the commodities, we've got your stocks to go through as well. But of course, that wraps up the free section. If you're not a strategy session member, there's a link below. Click that, come on in. Doesn't cost you very much. I think you can get a whole lot of information for the small amount of money it costs to put all this on for you. So yeah, think about doing that. Click that link, come on board. All right, so let's go to the Russell.